Morning everybody, welcome to this weekend general update for the 9th and 10th of March, and we've had another very positive week in the US, reasonably positive week in Australia, and the signs remain pretty good. We are due for more of a pullback than what we've seen. The last one was very brief, and we are coming towards a period of the year that over the last couple of years has been pretty unstable from April through to about August, September. So it'll be interesting to see what happens this year. I'm firmly of the view that it's not going to be nearly as significant as it was in those prior years, because the circumstances really are very different from what they were in 2010, 11 and 12. But nevertheless, markets do not go up in a straight line, and we will get some corrections. They could be sharp, but if they are, I think they'll be fairly brief. And it really comes back to selecting good stocks that are going to be more resilient and are going to bounce back fairly quickly in the event of a sudden market correction. Anyway, let's have a look at the action for last week. This is the licensing and general advice information. So a summary for the week: the S&P gained 33 points in the end, had a very strong week, and I think something like 8 of the last 9 sessions have finished higher, and almost all of them have closed at or near the high of the session. So the buying pressure is really just relentless. Now the S&P has just got to the bottom edge of a resistance zone, which for me is between about 1552 and 1575, so it's right at the bottom edge of that zone. I don't see any sign of weakening at all in this trend, so in the short term this could continue higher. And the environment for the next 2 years looks extremely positive for stocks. I mean, if you start with the fact that on a long-term historical basis, US stocks are fair value or slightly under fair value, so they are not expensive despite the rise in the market. And then you add on things like low interest rates, low inflation, easy credit, an energy revolution in America that's really revolutionizing their manufacturing, recovery in the jobs market. We saw some great jobs data on Friday night, a recovery in the housing sector, and there really are an awful lot of things that are heading in the right direction for America. So it's hard to see how stock prices are not going to continue to trend to the upside, albeit with the normal ups and downs that we get. But I think the direction is going to be higher. Now our index, this was really more of a timing issue because we had a bit of a down day on Monday. Our index gained 37 points. Now our banks in particular have had a great run, and it's been fueled a lot by overseas money that came here looking for the higher yields that our stocks offered, and also gained the benefit of the fact that the Aussie dollar was rising as well. Well, the Aussie dollar's stopped rising, and I really think there's more risk to the downside than the upside. So I wouldn't be surprised to see some of that overseas money start to go elsewhere. So at the index level, at the major stock level, we may not have a whole lot further to go. I don't expect much of an index decline, so I guess if I'm not expecting it to go up and I'm not expecting it to go down very much, then we're probably going to fall into a broad range for a while, at least with the major stocks. But with other stocks, some of the high quality small and mid cap stocks that we've been trading in, there's still terrific upside in those. Now US bond yields continuing to track higher, and to me that just ensures that the Fed's going to keep buying bonds, and that is going to continue to support the fundamental case for gold. The US dollar rose a bit on the week, and it's still moving back towards 84 cents. Gold was steady, and it was the smallest range, as we'll see when we look at the chart in a minute, smallest range in months. It's impossible to say whether it's definitely bottomed. 1550 remains the critical support level. My feeling, well, fundamentally gold should go up from here, there's no question about that. Technically, whether the futures market overwhelms that in the short term, I don't know, we'll have to wait and see. but there's certainly evidence that gold stock indices are showing some signs of having based and turning up. Now we've been fooled a couple of times before, and it's possible it could happen again, but this time I think we've got a bit more substance to that. Copper rebounded very slightly back to 351, and oil was back up to $92 a barrel. And this is the 6-month chart on copper. You can see we had quite a sharp fall during February, and hopefully it's stabilizing now around this 350 mark. And 350, mind you, is still very profitable for most copper producers. So let's have a look at some charts. And we'll start first of all with we'll start with gold. So this is a weekly chart of gold. So you can see that we had a very small range week, and really the last 3 weeks we've closed pretty much at the same level, around about the 1575 to 1580 mark, and this support level here is holding. Now it's not really showing any signs of turning up, but a high degree of the time gold stocks will turn up before the price of gold does. And as we're seeing, we have a look at a couple of different gold indices. We'll look at the GDX. It's not really showing that much yet, but Wednesday was a stronger day than we'd seen in gold stocks for a while, and on pretty good volume as well, coming up from oversold. And then on Friday, didn't really make that much in the way of gains, but again the volume behind that index is really quite strong. Now what I do find encouraging though is the junior index, the junior gold producers in America, it's an even stronger pattern. You can see we've got a more positive move and even bigger volume on Wednesday, and again a slightly more positive move on Friday as well. We've got some clear divergence here on the RSI on gold, so you can see that we've formed a higher low, and we've also just formed a higher high on the RSI. Yet in terms of price, the price was actually formed a lower low during that period. Now that's the first time we've had that degree of positive divergence, so that often, it's not a guarantee, but that often works out very well to the upside. So I think the odds are really increasing that we've seen the bottom in gold stocks, and they may well start to turn up now, and we won't see gold turn up for another week or two. Let's just look at the HUI index, which is just another index, another way of looking at the major stock indices, and it's the same sort of pattern as the GDX, as you would expect. So fingers crossed, we've seen the bottom in gold stocks. Let's have a look at the S&P. If we just pan back, you can see we're between two key support and resistance levels. We easily cleared the first one. Only spent 2 or 3 days to the downside and then just went straight back up through it. There is some minor resistance around the current level, 1552. RSI not quite overbought yet. We are seeing some divergence here on the RSI at this point in time. Lower high and a higher high in price, which is indicating that yes, the price is still going up, but it's starting to lose momentum. It's going up less quickly. So anyway, we'll see how the S&P pans out over the next few weeks. Now, just looking at the Shanghai index, which is important for Australia, had a fantastic run from December until the highs in February. Pulled back fairly sharply when the Chinese government started to tighten things in the property market. But look, that was always going to happen. And at this point in time, let's just have a look and see what percentage we've pulled back. We've pulled back exactly to the 38.2% level. So as long as that level holds and it starts to move higher, then that's a pretty shallow correction and indicative of a lot of momentum to the upside. Now looking at the ASX 200, we had resistance at about 49.70, and it went straight through that, and really there's nothing much now until we get up. There's a little bit of resistance coming up in another 20 or 30 points, but after that you've got to go up to almost 6,000 points. So small amount of resistance fairly soon, but then really about the best part of 800 points of free air above that. So it'd be interesting to see how the Australian market goes. Let's just have a look at the relative comparison chart between the different sectors. On the top we've got healthcare, still continues to barrel along, unquestionably the strongest sector and has been for a long time. Telecoms is the next one in the olive colour, but you can see it's just really stabilised and if anything turned down a bit in the last few weeks, and that's really Telstra having probably reached a peak. Finance, the banks still going strong. No real sign of that weakening off, and it's really tracking around about the same percentage increase as the healthcare index. Down the bottom we've got the small ordinaries index in blue, and we've got the energy and materials indexes in red. They've clearly been underperforming for quite some time, so no real change there. They are trending up, but they're not really gaining any ground on the banks and healthcare at this stage. But all things run in cycle. Money moves around in various sector flows, and I think at some stage during the year you will see some catch up in the resource stocks. So that's it for this week. I think we're, as I've been saying now for quite a few months, since probably around about September, October last year, I've been saying that 2013 looked like being a terrific year. I think it's a year if you're disciplined and you buy good quality companies on the dips, you should have a pretty good year. So that's it for this weekend. Talk to you next weekend. Cheers.